Africa has been removed from the European Union's list of high-risk third country jurisdictions following steps taken to strengthen its anti-money laundering and counter-terrorism financing systems. It means EU financial institutions will no longer need to apply enhanced checks to transact involving South Africa, which may ease financial flows. However, some challenges do still remain and further improvements are still required. Just One Lap founder Simon Brown joining us now to discuss the significance of this development. Simon, a good chat to you. Happy New Year and all those good things. How important and how significant is this? And will we really get more flows into the country off the back of this?
Morning, Arabella. I mean, it is very important, but I suppose we have to, we got off the grey list in October. Right at the end of October, we were off the greylisting. And that perhaps is the bigger deal because greylisting is a global organization and a global process. And in fact, the European Union kind of just follow what the Financial Action Task Force do, and hence we ended up on that list, and hence a couple of months later we come off it. But we need to understand it is important. I mean, it absolutely, investors in many cases would look at South Africa and think the extra required paperwork, the extra sort of due diligence that needs to be done would have seen some investors look elsewhere. We've seen research coming out of World Bank and IMF in terms of the impact to capital flows and GDP, and it's maybe a 0.25%. That's not insignificant. So it is important, and I think what it's also doing is it's kind of just making little tick boxes as we sort of green shoots, as we had a fairly good 2025 in terms of improving. We've got our electricity working. We're seeing some uptick in the logistics sector, and this is just another step in the right direction. Small steps, make no mistake about that, and not out of the woods, but it is another move in that right direction. And in that sense, hugely important as it positions South Africa in the global economy.
Yeah, it certainly enhances the buoyant mood that certainly has been around South Africa a little while from the investor community overall. But does that mean foreign flows do begin to come in a little bit further, or does it just continue as it always has because the risk premium for South Africa kind of still remains the same?
Yeah, I mean, it's a fair point. I mean, the risk premium remains the same. We did get an upgrade from Standard & Poor last year. They, of course, Fitch and Moody's have got us as non-investment grade. And that perhaps is, in some senses, more important. But there's different types of investment. I mean, if we look at bond investors, we saw foreigners were net buyers of our government bonds last year. And they typically are fairly fast to the party and will leave in a hurry if need be. What we haven't yet seen is the significant buying in our equities. Expectation is we will start to see more of that. Certainly, we saw some action towards the end of last year. We've seen a little bit this year as well, where foreigners are coming back into our stock market. And then the third component is that sort of foreign direct investment, where you come in and you're buying an unlisted business, or perhaps you're actually starting from scratch and building a business, or expanding the current business into South Africa, and that typically is the sort of the last part of that process, and that it takes longer, happens later, but is more significant. So we're still early days in the process here, but it's moving in that right direction, which is so hugely important. Whereas, if we had this conversation 3 years ago, it would have been much more a case of, we're moving in the wrong direction. We can quantifiably say things are improving.
So what is the lesson here, especially for the South African Reserve Bank, who, when you take a look at things like anti-money laundering, counter-terrorism, is pretty much their domain?
It absolutely is. And there's also some small nuance. For example, when we got grey-listed back in 2023, part of the challenge was there'd actually just been a change at the end of the previous year that was unexpected. And that kind of caught South Africa on the back foot. There were also some other sort of own goals where we simply, Parliament hadn't done what was a fairly simple process. But what we've seen, as you mentioned, the Reserve Bank, a huge part of this, National Treasury as well, and hats off to both. I mean, there was a lot. There was some 20 different points that we had to do, some a lot easier than others and done fairly quickly, others taking the better part of 2 years to get through. But it was a good achievement to ultimately get off that grey list and put ourselves, and you mentioned, Arabella, and it's not unimportant, the process here is around money laundering. It's around combating terrorism. These are, and organized crime. These are things that you want to be on the right side of international law. And that right side is quantifiably that you don't want to be aiding and abetting. You don't want to be seen to be aiding and abetting. And that's been a hugely important component where we have simply just sort of strengthened our processes, strengthened our laws to make sure that if it is happening in our country, we're able to do something about it and therefore sort of sit with the international community against these types of financial crime.
Simon, let me quickly bug you for something that perhaps is a little bit off script here. De-dollarization. What are the chances here? Because we've now just seen one lender, Standard Bank, going all the way and saying, well, we're going to plug into China's payment rail system here. That's the China cross-border interbank payment system. Of course, we've been part of the global interbank system for many years. How significant is this? What does it mean for the dollar?
Look, Arabella, de-dollarization is happening. Make no mistake about it. It is absolutely happening. It was happening before President Trump. It has accelerated during his second term over the last almost year that he's been in office, and will continue. I think what's important is that it doesn't mean that we're going to suddenly wake up later this year or next or in any of the next couple of years and discover that the dollar isn't the dominant currency. It will continue to be. It's just going to be a little bit less so. And it's going to be that gradual process as, for example, Standard Bank ties in with the Chinese system to move money globally. Standard Bank was an obvious one. They've got ICBC, the Chinese bank, as a I think, if I recall, a 21% shareholder there. So that made a lot of sense. But we certainly are going to see the world sort of moving away from it. And here's the point. If we are selling, let's take gold as an example. Let's say we're selling gold to India. Why should we take our rands, turn it into dollars, and then turn it into rupees to sell gold to India? Why don't we just go rand rupee? Now, the problem is that there's often not enough liquidity, enough transactions happening in the two currencies. But in the case of the Indian rupee and the South African rand, there is. Why that extra leg? It frankly adds cost and complexity to the process. So we will see a continued drive to less use of the US dollar, but it's going to be the dominant currency for decades to come, even as that dominance wanes.
Simon, I don't know about you, but you just made a compelling case even for cryptocurrency actually there, because that could have worked in one system itself. But very quickly, let me touch on AGOA. There's the US House of Representatives saying, look, I think it should definitely go forward. Whether they continue to look at South Africa a little bit more and the vote heading to Senate, of course, is another thing. There could still be a veto, of course, from Donald Trump, even after all of that. But how important would it be to keep that deal going, especially for South Africa?
It's interesting. AGOA is important. Absolutely, it is, particularly for our vehicle manufacturers down in the Eastern Cape, up here in Pretoria. Important for them, but it's not. It's maybe 2 or maybe 3% of export. So it's not the end of the world, but it's important to have because it certainly benefits some industries, and some of those industries are of high employment, and that absolutely matters. So it's important in that regard. It's going to get passed. The question is, does President Trump do a carve-out against South Africa? And that more is around sort of diplomatic relations, and that perhaps is the bigger issue. Economically, it matters. It's not giant, but it's important. But I think sort of diplomatically and politically, perhaps it's more important to see whether it can get onto the president's desk and whether he signs it and leaves us as part of that process.
Simon, does WEF still matter? It's happening next week.
It's a good point. And my gut response is probably no, because it was only yesterday morning at about this time when something happened. And I'm like, oh, of course, we've got Davos. And I mean, Arabella, 10 years ago, Davos would have been all we would be speaking about this week. I think it is fading. And I think that's part of sort of global institutions that have been sort of eroded since President Trump's first term, certainly in his second term. And I do think it is less important than it used to be. And I think it's not just what we're seeing from the US president. It's the pushback against the billionaires who give us their slop and their instant social media and the like. I don't know that it is important as it used to be.
Yeah, very interestingly though, Donald Trump will be in attendance, according to the World Economic Forum. So it will be interesting to take a look at that one as we head out to Switzerland. Simon, always good chatting. Let's do it again. Simon Brown, Just One Lap founder, as we just discuss the significance of the developments around the EU removing South Africa from that